The big banks in focus. Bank of America fourth quarter earnings just hitting the wire a few minutes ago, and they were better than expected. The company had a double beat on earnings and revenue. Back with us is Hilton Capital Management Chief Strategist, Bank Analyst Dick Bove. Dick, what are you most focused on this earnings period for the banks?
Well, if I could take a second just back on Bank of America, this is an unbelievably good quarter. It's actually superb. Loans are up, margins are up, net interest income is up, non-interest income has been hit by trading, but that doesn't matter, and their expenses are down. My guess is that if this stock isn't over 30 now, it's going to get over 30 today. I mean, this is one of the best quarters this company has put up in a few years. So that is incredibly good. All right, in terms of the answer to your question, what you have to focus on more than anything is what is happening with loan quality. And in the case of Bank of America, they did show a little erosion in loan quality here. But, if loan quality remains where it is and banks continue to come in with moderate to mediocre increases in earnings, I think the stocks will move higher. Bank of America did not have mediocre earnings. These were superb numbers.
Dick, I have a question for you. Maria had Brian Moynihan on just a little bit ago, did an interview with him, and he talked about the impact of interest rates, the higher interest rates on their profitability. To what extent do you think that the higher interest rates help them in the fourth quarter? And now knowing that things might be softening a little bit, might not help them as much in the first quarter?
Well, actually, I'm on the other side in that argument. I think that higher interest rates do not help banks. And I think in the case of banks, what you can see is, and you can see this in Bank of America's numbers today, they're losing a lot of non-interest deposits. In other words, non-interest deposits are going out the door, or they're trying to reattract them by paying the depositor a higher yield on their money. The second thing that happens is because they have such a huge amount of bonds that they own on portfolio, the value of their assets go down. So they don't publish this, but the real book value of a bank goes down when interest rates go up. So I think that the fact that the Fed has caved here is very, very positive for the banks, because it's going to give them a chance to hold on to the low-yielding deposits, low-cost deposits, and I think that they will be able to perhaps move up the yields on loans a little bit. So I know that the whole industry believes that higher interest rates are good for banks. I just don't believe it.
What happened to PNC? I mean, this was a double miss on PNC, reporting revenue and earnings missed expectations. As you can see, PNC just hitting the tape a few minutes ago, but we can tell you for sure that the numbers coming out below expectations on both earnings and revenue, Dick.
Yeah, the problem that PNC has is it's a commercial bank, which means it lends primarily to commercial companies, not so much to consumers and not so much in real estate. So if commercial loan volume starts to ease up a bit, which it did, in the beginning of 2018, it was growing at 7 to 8% a year. It's now growing at 5% a year. That hits PNC. In addition to which, PNC just spent $1 billion on technology, and it's putting in place this nationwide approach without using branches. In other words, it's attempting something that no traditional bank has ever done before, in terms of saying, okay, we now have the technology, we can sell our products all over the United States. So that tends to hit their expenses. I think the guy who runs it, Bill Demchak, is really sharp, really smart. I think that he's got a strategy which is really going to work. But if, the loan volume isn't there, and I'm assuming that it wasn't in this quarter, it wasn't last quarter for PNC either, if the loan volume isn't there, the company just can't drive its earnings higher.
Dick Mitroshaw, I want to go back to something you said before in response to Lee's question about higher interest rates not necessarily being a good thing. If we end up having a very flat yield curve for most of 2019 and maybe even inverted from time to time, how's that play out for banks throughout the year?
Well, we do have a laboratory experiment. 1966 to 1982 was a period in which interest rates kept inverting. In other words, you had the yield curve inverting constantly. About 1/3 of the time to 40% of the time, the yield curve was inverted. In that 16-year period, bank earnings went up every year. So my belief is that the banks can set a spread on the product that they are selling to deal with, you know, the interest rate environment, even if the yield curve inverts. So I really don't worry that much about interest rates or change in rates. What I really focus on is, are these companies selling anything? In other words, they're like any other company. If you don't sell something, you can't make more money. And what they have to sell is loans. And if you get a strong economy, they'll sell a lot of loans. Their earnings will do really well. And, you know, you want to buy them. What we're dealing with right now is that the economy is maybe going to grow, I don't know, 1.5%, 2% this year, and that is going to reduce the ability to sell loans very rapidly, and that's going to be a problem for the industry.
That's something that not Jamie Dimon, that Jonas Ferris said at the top of the show, that it's not that the banks set what you know, they're paying this on deposits and they're getting paid this on mortgages and other loans. It's the demand for those loans. And you saw it even in J.P. Morgan's report yesterday that it had 1% growth in commercial and industrial loans. So maybe that's temporary. But to Dick's point, like, the yield curve matters less than what the banks can actually charge their customers for this lending.
I agree with that 1,000%.
Ties right to the economy. Ties right to the economy.
Exactly.
Dick, you were right on Bank of America. Great call there. The company obviously doing real well. Is that the one that you would put new money to work in now, or do you want to buy any of these stocks?
Well, yeah, I do want to buy. In other words, I think that we had this massive, if you will, freaking out in December, which all of a sudden made these stocks appealing on a valuation basis. And there are two stocks that you have to look at. One, these numbers on Bank of America, I'm telling you, are incredibly impressive. But the other one you want to look at is Citigroup, because this whole trade situation hit Citigroup unbelievably hard, because Citigroup supposedly is the largest provider of trade finance in the world. So, you know, if we are going to get any deal on trade, you know, it's going to hit Citigroup very, very positively. And that stock, which has been moving up in the last couple of days as this trade information is getting more positive, could go up even higher. There's no reason that Citigroup should be selling it below book value at this point. And as I say, if you get any whiff of a trade deal, Citigroup stock could be explosive. There
is a financial sort of deal that I will tell you about, that Fiserv is combining with First Data for $22 billion. It's an all-stock transaction. So again, that's the processing, Dick, that feeds into the financial services industry.
Yeah, no, it definitely does. In fact, you know, one of the big areas in 2019 that I expect to see is, if the market gives us a break, is a huge number of mergers and acquisitions. And I think
for some of the smaller banks.
Yeah, we'll see them among the smaller banks. The big banks can't buy anything.
Right.
But you'll see mergers and acquisitions that will increase their investment banking income, in addition to which there should be, you know, these huge IPOs hitting the market, which will be unbelievable in terms of its positive impact on companies like Goldman, Morgan, J.P. Morgan, Bank of America, et cetera.
Yeah, there's a big list. You got Uber, Slack, Lyft, Pinterest, Airbnb, a number of IPOs on deck. We'll see if the markets cooperate with that.
And the SEC is open.
Yeah, exactly. But Dick, it's good to see you.
But this is right. You've been talking about this for years, Maria. This is fintech. This is in the heart of fintech. $22 billion deal.
So, and we'll probably see more. Fintech is the buzzword. Dick, thank you. Dick Bove.